So everyone is still panicking, everyone is still worried. What's happening with Bitcoin? What's happening with the whole crypto market? Everything is down. Bitcoin continues to fail every attempt to break resistances and any attempt to go higher than 56,000. In fact, today we are back at this crucial level, and there's indicators that show us a potential drop, a potential further drop, even below the 50K. This is what I'm going to explore in this video. I'm going to show you some support and resistance levels. I'm going to show you a few different indicators that point towards a possibility of Bitcoin dropping below 50,000, or at least dropping to 53,000, which is a support level. But how far can Bitcoin go? Can it go to 40K? I'm going to show you why it's possible, but also I'm going to tell you what is the most likely scenario and why I am still not worried about Bitcoin in the longer term. And I'm going to try and justify my conviction that the bull market is still continuing, and it's going to continue throughout 2025. It's not over yet. We are far from being done yet. Hey everyone, welcome to another episode of Crypto Corner with myself, OJ, crypto investor and analyst for the last 8 years. I've been tracking the price of Bitcoin since 2015, and I've been trading Bitcoin since 2016. So I'm going to share with you the charts here. I'm going to go into the chart and I'm going to show you what I'm seeing here. I'm going to justify my position that Bitcoin is not yet completed its bull cycle, and that this right now is still a correction. It is not a downwards trend. It is not a bear cycle. And there are quite a few indicators that I'm going to show you to justify my position. So let's get started. Let me switch to my other screen. All right, well, let's start first with the daily chart here on Bitcoin. So what we are seeing, I've drawn the Fibonacci levels. These are the blue lines that you're seeing. And then we have our downwards trend line, which we started back in March. Since March, we are actually following this downwards trend line. As you can see, every time we challenge it, we get a rejection and then we drop lower. So it is a downwards channel. It's been going on for some time. That's why everyone is so afraid, because we haven't actually seen a bull market with a 6 months of a downtrend. What's happened last time something similar happened was back in 2019, and this was as we started here a minor bull run. In June we actually topped out, and then from June 2019 all the way until the halving, which happened around here in May 2020, we were actually going in a downtrend. In fact, this was the downtrend. We managed to break above it briefly, and then very soon after that we had the pandemic, the start of the pandemic, a massive black swan event that took all of the markets down. We had a very bad week here, about a couple of weeks of really significant drops, and then the bull market resumed. So this is the only thing in the history that we can compare, that we can use here as a fractal of something that is happening right now, something similar. This bull run started a little too early because we did have the ETFs, the spot ETFs being approved, and for the first time now we are actually having a completely different climate here in trading Bitcoin, because we didn't actually have proper institutional investors heavily buying Bitcoin in bulk, and this should mean that the price should be shooting up, right? So why doesn't it? Well, we did have a huge sell-offs. The German government was selling thousands of Bitcoin. Now the US government is also selling thousands of Bitcoin. So we do have, a huge selling pressure. But the reality is that right now, 6 months of a bear cycle here, of a mini bear cycle within this bull cycle, is not a typical Bitcoin behavior. This is why we see so many people right now calling for further drops and calling for a complete bear cycle actually already undergoing. Now, I'm still at the opinion that we are continuing the bull cycle. There are a few indicators that I can refer to here that are showing us these kind of signs, but it is not impossible to drop even lower. And I'm going to talk about that. But first, let me quickly go through these indicators, and then I'm going to go back to the chart. So here is the Bitcoin Rainbow price chart indicator. Now, according to this indicator, as you can see, first of all, we are quite low in the light blue range. This is kind of the bottom of this rainbow chart, and this chart is a mathematically calculated logarithmic growth curve. We look at this to forecast the potential future price direction of Bitcoin. It overlays rainbow color bands on top of the logarithmic growth curve channel to highlight market sentiment. So the cooler colors, which is where we are currently, indicate periods where overall market sentiment is typically depressed or quite low, and everyone is scared. There's a lot of FUD, which is literally what we have right now. And these are typically excellent times for strategic investors to accumulate Bitcoin. While the warmer color, the upper colors, the reds and the oranges and the yellow, this is when we are getting overheated. And this is usually a good time to be taking some profits, to be selling. So by all means, what we are seeing right now is we are in an accumulation zone. This does not mean we can't go any lower though. And this is why we're going to be looking at some other charts. Now, in terms of the cycle, where we are in the cycle, why am I so confident that we are not finishing this bull cycle just yet? This is the pi cycle top indicator. Now, typically, what we are looking for here is a cross between these two moving averages. The green and the orange line are moving averages. We are looking for crosses. And when we see a cross, let me try and get it really obvious here. When we see this is the cross I'm talking about, this is usually our signal that we've reached a market top. And as you can see here, these two lines crossed exactly, or maybe a day or two before the actual market top. But this is quite precise because a day or two is nothing in the greater scheme of things. If you manage to catch a top within a day or two, this is going to be your best trade. So this is a very good indicator because it worked in the last 3 cycles. We had it here, also here, and here. These are 3 cycles here, and you can see with markings the dotted lines are the actual Bitcoin halvings. So in the last 3 halvings, this indicator worked. Yes, it's possible that it may not work in the future, and maybe even this cycle it might fail, but so far it's worked. Therefore, I am following this indicator. I am taking it seriously, and I feel that it's going to work this time as well. This is why I'm actually looking at the pi cycle indicator quite a lot. And this is where we currently are. The 2 lines never actually crossed during this cycle. Therefore, there is no certain indication that we have already topped out. Could this cycle be different? Yes, of course. So could it actually end without the 2 lines crossing? Perhaps. But the most likelihood is that we are going to see a continuation of this bull cycle because the price action so far has not presented us with a clear indication that the bull cycle is over and that we should be looking for another bear cycle coming already, or have already started another bear cycle. Lastly, I'm looking at another on-chain indicator. This is the golden ratio multiplier, and this indicator, along with the pi cycle top indicator, were designed to work in Bitcoin's early adoption phase before it reaches mainstream status. Now, Bitcoin, I would argue, is still not at a mainstream status, so I still feel that this indicator is valid and it's working. The current fib levels indicate where there may be major resistance for Bitcoin price, and this has been true throughout Bitcoin's history. It is therefore a useful Bitcoin price prediction tool, an indicator of where the smart investors may choose to manage their risk. It's currently forecasting that the next potential resistance level is the 2 times multiple, which is the red line. Here, what we can see is that this red line is currently at $105,000. This is our major resistance. Of course, we do have resistances along the way. I'm going to go into the chart now and we're going to look at this, but what you are seeing is that here our support, which is the orange line, lies at 52,752. And this is why I'm talking about a 53,000 drop maybe on the map. I'm gonna go into the chart and I'm gonna give you some more justification for this, but on the way up, we do have another resistance before the 100,000 and it is at 84,000. So 84,000 is the first line. This is where investors are going to be locking in profits. This is kind of, the first sell-off where we're going to see. So it will be a resistance. We might not be able to break it that easily. Once we break though, the next resistance, the stronger resistance where most of the people will be taking profits, is at 105,000. And as you know, I'm talking about reaching 100K throughout this cycle and even above 100K. But 100,000 is a psychological resistance. Typically, the price tends to get rejected from these kind of round numbers. Of course, as we enter 100K, it's very likely that we will touch 105, maybe even 110,000, and then get immediately rejected. This is what I'm expecting, but this is for the long term. Now let's go back to the chart so that we can look at the shorter term. And what we are seeing here is that this downwards trend line, we've been respecting it for over 6 months now, but another thing we're doing is we are forming this inverted wedge pattern. And this is actually a bullish pattern. It's also called a broadening wedge pattern. This typically tends to break on the upside. So this is the good news. And as you can see, we are forming this pattern. We can form this for much longer, of course. We don't have a guarantee that we are going to end it anytime soon. So this pattern alone is not actually giving us enough confidence that we are out of this correction yet. We could drop to the bottom of this pattern and then make the next rally on the upside. And if we are to drop lower, first of all, we have here a support at 54K, but 54K is not a very strong support. It's the 0.382 Fibonacci level. Typically, during corrections, we tend to drop to the 0.50 Fibonacci level. We already did that, by the way, here. And this is currently lying at 49,000. So a drop below this level, below this support, can easily take us all the way back to this level, back to the 50K and 49 in fact. And even if this support doesn't hold us, we have a lower support at the 0.618 Fibonacci level, which is our golden pocket. And this is currently laying here in the 40K region, 43,200. So this is a very important level for us, because if we reach this level, we have to actually bounce on the upside from here. If we fail to find the support here, and if we fail to bounce on the upside, then we can really talk about a bear trend coming, a proper full-on bear cycle, something that people are already talking about. But unfortunately, right now, this is just a speculation. We actually have to wait. We have to go to that level. We have to break this level, not hold us, break this support, break this golden Fibonacci level, and only then we can talk about a proper bear cycle forming. Unfortunately, this is the confirmation for the bear cycle. We cannot talk about the bear cycle unless we confirm this breakdown. But on the flip side, the good news is that we can even drop to this level. We can drop to 43,000, 42,000. And if we bounce from here, if we find the support, this is the continuation of the bull cycle that we are all waiting for. So even a drop below 50K is still not going to make me bearish in the long term. And as we move into the shorter time frames, I have consistently anticipated a sweep of the 63K, followed by a failure at the crucial level, leading to a decline towards the 58,000, which is where we are currently. We actually broke the 58,000, and that was another thing. This support here should have been holding us if we were to continue the rally on the upside, but the support didn't hold us. We broke it, and we are currently below it. We are at 56,700 right now. So the failure of Bitcoin to hold the 57 and 58,000 level is very indicative that a further drop is on the table. Overall, I believe that the chances of a retest at 53,000 are quite favorable as long as Bitcoin stays below the 57K. And today we are again, yesterday we were below 57K, today we are again below 57K. Pretty much every day we actually drop below this level. Now here is the hourly chart. On the way up, what we can see is that we do have our first resistance level, which is at 57,700, so close to the 58K. We have a second resistance level, which is 58,100. These here are going to act as resistance levels right now. We even have here the 0.382 Fibonacci level at 57,100. So we have these 3 resistance levels on the way up, but these are not major resistances. We can actually, if we get a lot of volume coming in, we can easily sweep through these levels in a day. We did try this yesterday, by the way. As you can see, in just one day, we managed to sweep through all of these levels, and we got all the way back up to 58,500. But this proves to be a much stronger area of rejection, and this is why today we dropped again. However, we are making a higher low. This is very important. Yesterday we printed a higher high compared to this high here, the previous one. Today we are printing a higher low compared to this one here. So if we manage to hold this low and we do not drop any lower, this is going to be good news. This is the good news that many traders are expecting. However, this is in the short term, so we can't really count on this. But it is good news because higher lows and higher highs are indicating upwards momentum that is being built. And as we are building this upwards momentum right now, it can actually accelerate. And then we can start a full-on recovery rally on the way up. So this is a possibility. We have to be aware of that. It's not the only possibility, however. We also have the possibility, of course, of going down, and this becomes more obvious as we zoom out. Now, this is the monthly chart, so much higher time frame, and what we are seeing here is that stochastic RSI is actually in the middle region. It's not in the oversold region where I want to see it to actually indicate that we are ready for a move on the upside. The simple RSI is doing the same. Both of them are actually pointing downwards, so they're still going downwards. There is still more room for both of these oscillators to go downwards to actually get into the oversold region. Even worse is the MACDs. This is the MACDs, these are moving averages. Both of them have just recently started curving on the downside, and typically this moving average, basically this is where we are somewhere here. And you can see from past performance, this is what they do. As they get up here, first of all, they're going on the upside, they're getting quite far apart. As they get quite far apart, they immediately pull back and they start getting tighter and tighter. As they get tighter, this is tighter, we see a bearish cross forming where the blue line is crossing the red line on the downside. And this is now starting a proper downtrend. This downtrend here, I will now zoom out so that we can see what the chart looks like. This downtrend is usually going on all the way until we get here in the lower region, and then we see a curve on the upside. The two lines are making a bullish cross this time, and they start going upside until they get quite far apart, at which point they start pulling back and get tighter and tighter until at some point they cross, right? Now, this is not necessarily happening as clear as it is here. Sometimes they get tight together. Let me draw here. They can get tight together, but they don't actually have to cross. And we can actually see them getting further upwards and getting quite far apart again. And we can actually see a continuation of this price action until at some point they start getting tighter together. Let me move this so they can get tighter together, and we can actually see again this bearish cross forming where the two lines cross and they start going downwards. And again, we have a bear cycle because this is market sentiment, and sentiment changes. So this is still based on sentiment, even though it's technical analysis. This oscillator is about sentiment, just like every other oscillator. All of these oscillators are actually estimating the market performance, which is based on sentiment. The people's sentiment is what's driving their trades, and most of the time it's the sentiment that is driving the price action. So when we're doing technical analysis, we are still doing sentiment analysis in a way, just indirectly. Okay. Now back to this chart. Typically, September is not a good month for Bitcoin. Everyone knows that. Everyone's talking about it, and I can't ignore that. I have to take this into account. In fact, September is the worst month for Bitcoin because, as you can see, this is here the months of the year arranged as how favorable they are to Bitcoin. September is by far the worst month for Bitcoin. It is worse than August. It is worse than June, and June and July are also bad months for Bitcoin, but you can see here September is by far the worst. We can actually look at this chart, and here we get more data. So in September, as you can see, from the last, we're not going to count this one here because this is this year, and we haven't actually completed the month yet, but on average, September is minus 4%. It is by far the worst from everything here that we see. We've had 1, 2, 3, 4, 5, 6, 7, 8 negative Septembers in the last, 12 years? 8 negative Septembers, by far the worst. So we can expect that this month is not going to present very big pump opportunities, and most likely we're going to end it in red. And because we already started it quite low, it depends on how bad it can get. Are we going to end it at this 0.382 Fibonacci level, or are we going to break this support and go for the 0.50 Fibonacci level, which we already tested? It was holding the first time. I'm expecting that if we are coming for this, which is at 49,000, 50,000, around this price, I'm expecting that if this is to happen again, it's going to hold us. But we have to be prepared for the possibility that it may not hold us. And this is really the worst case scenario. This month, we also have the Federal Reserve meeting, which will address interest rates updates, and it is expected that the Fed will introduce a rate cut, which typically is good for risk-on assets. Generally, such cuts are seen as positive for crypto, as they often lead to more investments in riskier assets like Bitcoin. Investors typically shift their funds from safer investments like bonds to assets with potentially higher returns. This is what I expect to happen, but we have to watch out for the unexpected. And this time, some analysts, like in this headline here, are forecasting a different scenario. They predict that Bitcoin's price could drop by 15 to 20%, guys, following the rate cut. If this prediction comes true, Bitcoin might fall in the lower range, between 50 and 40,000. This is the worst case scenario, as I said. Most portfolios will be damaged badly if this were to play out, but it is a possibility and one that we have to take seriously. This forecast may not be surprising to those who follow Bitcoin's historical price trends. We just saw that September is historically a really bad month, tough month, let's say, for Bitcoin, and analysts are using this historical pattern to support their prediction. So if this is to happen, what we can expect? Well, I already showed you in the beginning. These are the Fibonacci levels. A break below this 0.50 Fibonacci level, which is below the 50K, can actually take us all the way to the golden Fibonacci ratio, the 0.618, currently sitting at 43,000. So 43,000 really is the lowest we can go here without panicking, without calling for a complete trend reversal. Bear in mind that this may not happen. It is a possibility, is one of the possibilities, but it is not the most likely scenario. The most likely scenario is that this support here, the 0.50, which we already tested once, is going to hold us. So don't be too alarmed, don't be too scared, and certainly do not sell at this point, because as you saw, we are right now in the accumulation phase. We are not ready for selling. We are ready to accumulate. So if anything, this is a good time to be buying Bitcoin. If you have any cash still available, or if you have any stable coins, this is a good time. These drops here, especially approaching the 0.382 Fibonacci level, 54, 53K, especially approaching these levels here that are already support levels, this is going to be a very good buy opportunity. Alright, well, this is everything for today's episode. Thanks for staying until the end of the video. I hope this helps, and if it does, show your support, leave a like, share it with someone else who would benefit from watching it, and leave comments. Any questions or any requests, leave in the comments below. I usually read the comments and try to address your questions in videos so that I can actually help other people as well. Also, make sure to check out the links in the description below, where I drop the links to all of the services that I'm using and that I recommend to you. And if you're new to this channel, hit the subscribe button, hit the notification bell so you never miss an episode. I'm coming to you no more than twice a week, so that I don't really spam you with videos and I keep my content straight to the point. I'm only talking about important issues. I'm not doing 3 videos per day to just flood with content and get all kinds of stuff. I'm actually recording videos when there's something important, when there's something interesting, when I need to do analysis of the market, when everyone is worried about the market. This is when I come here to save the day, to show you what I'm actually seeing on the charts and to make sure that we are making informed decisions. So this is my goal with this video podcast. I hope it helps. And again, if it does help, show your support. This is everything from me. I'm gonna see you in the next one.